Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday and TGIF, everybody. I hope you guys have a great upcoming weekend here. Summer is pretty much upon us. We've got June 1st here tomorrow, but today's May 31st. And we do got a couple important economic news releases scheduled for today. We'll start off with the personal income for the numbers of April. So back in March, we had a 0.3% growth in personal income, which is obviously good news. But they figured it was going to taper off a little bit for the month of April to zero point 0.2 as a forecast, and it went basically nil. So there really was no signs of growth of personal income for the consumers out there. Now we got the other hand, the consumer spending for the month of April. We had a 0.1% growth for the month of March, and they figured it would taper off a little bit to negative 0.1, so maybe people hold back, maybe save a little bit more, and actually went to negative 0.2. So both personal income decrease as well as consumer spending decrease. So we'll have to kind of wait and see how this will spread, if this will continue, these trends will continue, or if we'll start seeing consumer spending a little bit more, or how we're going to proceed, because obviously we need consumer spending money to get the economy moving. We got the Chicago PMI for the month of May, and that is the manufacturing for the city, for the Chicago region. 49 was the last reported in April, and that shows a contraction. So anything below a 50 number and the index is considered contraction. Now I figured it was going to increase a little bit and be pretty close to nil at 49.9 was the forecast, and it jumped up all the way up to 58.7. So great numbers out of Chicago for the month of May. So good numbers there. We'll have to kind of wait, watch, and see if that continues. Consumer sentiment for the month of May. We had an 83.7 rating listed before. The forecast for it was to be, here we go, it was supposed to slightly increase or maintain about the same, and it jumped up to 84.5. So it did jump up. We're getting close to basically the normal range where we typically are, which is in the 90s. So we'll kind of wait and see how this plays out. This is also getting better, but when you see personal income not improving and consumer spending pulling back, we got to wait and see if that continues or not. So, and some of this, they're kind of the Fed and economists are kind of watching to see results after the sequestration, see if people are going to continue, because obviously people are seeing less money in their paychecks due to the higher withholdings. They're also seeing, with the higher taxes, more people got laid off and stuff for cutbacks. So they're waiting to see how the numbers or the data comes out before they can proceed. And with the question last week of possible tapering, they're waiting to see more data to see if to evaluate the risk of if they pull back on it or not. So we'll kind of have to wait and watch. All right, folks, we'll jump over to the next one here, which is the headline news. Sorry, my system's running a little bit slow here today. And right now the stock market's up. They apparently are looking more at the Chicago PMI and the consumer sentiment rather than looking at consumer spending or personal income. So those two obviously aren't, the personal income and spending weren't great, but the Chicago PMI as well as the other were looking pretty good. So our consumer sentiment were looking pretty good. Now next week we do got some important news that will be coming out. We'll have the jobs numbers coming out later in the week. Unfortunately, I will be going out of town. Won't have access to be able to do these videos after Tuesday. So I'll be here Monday and Tuesday, but Wednesday through Friday I will be out of town and won't be able to do these. So my apologies for it. Maybe I'll try to see if I can do something written. Maybe that might help. But as of right now, I won't be able really to do these videos as I normally do. Just give a heads up. So let's go ahead and take a look at the bond market with that in mind. And right now we had some gains the last 2 days. Kind of take back on Monday or Tuesdays. Big huge drop, but today we're kind of dropping down quite a bit. So right now we're about 43 basis points lower for the day. We're at the 100.69 mark where we closed off yesterday at 101.03. We do look like we could be seeing some sideways movement here before we might even test this lower level again to see if it holds before it maybe potentially goes upwards before we have a trend reversal. But right now, I would forecast we could see this for at least for a few days, because if you look at the lines here, if we go along here, we got some room here between here. We got a little bit more room to be able to go a sideways pattern before it has to be make a decision going upwards or downwards. So I would, and right now I think they're just trying to figure out where they should go with the latest data and stuff. So be prepared to see some sideways moving before we get any improvement or any decline here. But as of right now, we've got lost in the gains we had yesterday, 43 basis points. That's nearly a half a point in fees and pricing. All right, folks, thanks for watching. You guys have a wonderful weekend, and we will see you guys tomorrow.